Hey, what's up guys and gals? Welcome back to the channel. Now, just a reminder, the purpose of this channel is to provide financial education that can change your life. Before we get started on today's video, please remember to like, comment, and subscribe so I can continue bringing you more awesome content like this. Hopefully the lighting's a bit brighter. It wasn't as bright last time. Okay, so today's video is going to focus on the question of, is investing risky? And we'll run through some real-world examples. So to get started, let's take the S&P 500, for example. Over the last 5 years, a lot of people that you talk to on the street will tell you that markets are risky, that there's a lot of fluctuation, and you do see some downturns here, the biggest one being the Rona, as they call it, right here. But overall, long-term, what do you see? You see an upward trajectory, and actually accelerating after the Rona, and almost a straight line. So that doesn't seem all that risky. The index in this period started down here, and it's up to almost 4,500. And then if you zoom out, you see an even more precipitous upward trend. So now, let's go through some old presentations that I actually put together for some classes some time back that I thought I'd incorporate here. So these are all the subsectors of the S&P 500, and hopefully you can see this here. Zoom in a little bit. The thing to focus on here, and this is from some time back, but everything is green and you have triple-digit gains over a 10-year period in all the subsectors, with the most obvious gains coming from tech and discretionary. 413% gain in 10 years from discretionary and 410% from tech. And all of these combine to create the index average that the S&P 500 is, that 4,500 that I showed you. A couple things from here. So this may or may not be some real-world investing results. And something I picked apart from this presentation that I did some time back. No one ever really says this, but the S&P actually stands for Standard and Poor. So why would anyone want to be Standard and Poor? So what I said, what would be the opposite of Standard and Poor? Unconventional and rich. So what we should do as investors, we should pick anywhere from, and this is just a suggestion, again, this is not advice, but we should pick anywhere from 10 to 100 of really solid stocks or funds and create our own index. Call it the UNR 10 or the UNR 100. Be unconventional and rich. So, as I started out, I posed the question, is investing risky? And we're going to go through some examples of certain things that may actually be risky, and show you where not investing may actually be riskier than investing. So, spoiler alert, what's the most risky thing you can do is to keep your money in cash over time. That's right. So this is a part of another old presentation I pulled up here, and you already got the spoiler from the slide after it. But two things I want you to focus on here. A 30% decline in your money over a 10-year period. Should that concern you? Absolutely. And guess what loses approximately 30% of its value every 10 years? And that's cash. And why is that? That's because of this thing called inflation that you probably hear a lot about in the news. So inflation averages around 3% a year based on the CPI or the Consumer Price Index. And you can look all these things up online to, as I say, do your own research. So this is actually the inflation rate since the Federal Reserve started in 1914. You can see some years way in the past it was negative, but in the blue it was positive, and it was very high in some years, exceeding 20%. But here in the more recent time frame, over here to the right, you can see inflation's averaged anywhere from 0 to 5%. So the 3% that I gave you in the last example may actually be an understatement. So the bottom line is, your cash money loses value every day. So actually, the risk is higher potentially to not invest than it is to invest. Now, the Consumer Price Index, or CPI, I'm not going to go through all this boring information here, so I'll just scroll through real quick. But this is the BLS.gov site, which you can go to do your own research. It's been revised several times, but there are a lot of experts that think that it's outdated, actually. The most recent revision, if I go back down to the bottom, you can see it's been revised in like the 50s and the 60s and 70s, and if you can read that fast. Most recently, the site says last modified April 9th, 2020. So that's right when the Rona started. So you've heard a lot about inflation in the news. So potentially, this could be due for yet another revision. So really, that's the key takeaway from this, is that I want everyone to understand that watches this video that really not investing is riskier than investing. So keep that in mind. And again, remember to smash that like button and subscribe so I can continue bringing you more awesome content like this. And thank you so much for watching.